All right, welcome everyone. Good morning. We'll put the comments up there, the chat, so you can drop a comment if you're tuning in. I see a couple people were already commenting before we went live. And we will wait just a few minutes to get started here. Wait for everybody to have a chance to jump on and wait until we go up live on all the different platforms. So hang tight with us and we'll get started here in a little bit. Good morning to everybody checking in. Adam, Christina, Matthew. Thank you, everybody, for tuning in early. And we will get started here shortly. Good morning, everybody in the chat. What's poppin', Angelo? All right, lots of people checking in. So we'll wait just a few minutes here to get started. Wait till we pop up live on all the different platforms, and then we will get into it. Just like we do every day, we'll do some rates, and then we will do a deep dive into the topic, which you already see there on the screen. Is going to be foreign national loans today. So just hang out with us for a minute. Wait till we go live. Lots of people checking in there. All right. So it looks like we are live on all platforms, so we can go ahead and get started. We can go ahead and take the chat off the screen there and get into it here for today. So my name is Kyle Hiersche. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans and things like foreign national loans is in that bucket as well. So we're going to talk about that today. But first, like we do every day, we're going to go through the live rates of all the different programs. So conventional, we're going to go through FHA, and we're going to go through some of the non-QM programs as well. That way you can see the actual live rates for today. And we like doing this show every day because you can see how the rates fluctuate and go up and down, so you can keep an eye on the market. Now, after we go through those rates, Jose is going to do a deep dive into one of our non-QM programs that we love, which is our foreign national home loan programs. So what we'll do, we'll have Nick go through the rates first. So go ahead, Nick. Let's pull up the pricing tool, go through the rates, and then we'll kick it over to Jose to do a deep dive on the foreign national loans.
All right, thank you, sir. Let me go ahead and switch my screen up and get into our pricing, and you can check that out. Give me 1 second. And let me share this tool here. And this is our pricing tool. So this is for our team of mortgage professionals. This is not something that's public, but it will allow us to see the rates for today. It is March 7th, just after 11 a.m. Eastern. So all of our standard programs are live, as Kyle mentioned. So we're going to go through a couple scenarios today. If you'd like a full loan estimate with all the costs and breakdown, please get with one of our team members. We can shoot that over. We have over 350 licensed loan officers and are licensed in 22 different states for primary second homes. And we can do our business purpose investor loans, such as the foreign national loans, in most states as well. So for our show today, we're going to set up a basic scenario. So we're going to have a nice, easy loan amount of $400,000. We're going to have a loan to value setting of 80% loan to value. That means 20% down payment. We're going to set our search to look for one discount point in cost. Typically, our borrowers are asking to buy down the rate a little bit, so that's typically our request. We are going to compare a few loan types. We're going to start with our conforming conventional. We're then going to go into FHA, which is usually the next best option. And then a lot of other lenders do not have other options besides that. But fortunately, here at the Mortgage Calculator, we have over 4,500 loan programs under expanded guidelines, aka non-QM. So we'll check those out as well. We do have VA loans. Those are for our eligible veterans. If you do qualify for VA, please get with us. We can quote that in a few minutes. But since not everybody qualifies, we don't do that live. And same with USDA. If you're looking in a rural area that is eligible for USDA, please let us know and we'll quote that up as well. But since not everybody lives in a USDA eligible area, we don't do that live. So let's start with our first example today, our conforming conventional rates. We're going to set everything to a purchase, 30-year fixed standard loan, primary occupancy, single family, 1 unit, Florida, Miami-Dade. That's where our office is based. And for all of our scenarios today, we will use an estimated FICO of 760 and an estimated debt to income ratio of 40. So with all these basic settings, let's see what our conventional rates are this morning. Let me get through the security check. And looks like our best option this morning is a 6.875 rate for 1 discount point. So a little bit better than it was last week, about the same as it was yesterday. So we love doing the show as we watch these things move and adjust with the markets. And we do have a ton of options here. So if you want to get with our team and find the best rate and cost combination that works for you, please let us know. Now, if a customer does not quite qualify for a conforming conventional, typically the next program that we want to go to, set this the same, ADLTV. The next program we'll typically go to is an FHA program. So we'll keep everything else the same for our scenario. And now we can compare our FHA rates this morning with our conventional. So you see here, especially because FHA just last week, the HUD just announced some changes. The government announced some changes to the FHA programs to reduce the MI. So now you actually see that FHA is even lower in the APR. So you noticed our APRs on the primary conventional was just over 7. Now we have our FHA 30-year fixed option for a 6.125 rate for 0.875 discount points, and that has an APR of 6.723. So that's a great option. Remember, APR allows us to compare apples to apples because FHA does require an annual mortgage insurance, which is paid monthly, and then also an upfront mortgage insurance. And those were the things the government adjusted, making the FHA programs very attractive. Definitely recommend those that qualify for FHA or conventional, definitely look at FHA now as a very comparable, and in this scenario, even cheaper option. So we love to give options to our borrowers. Now, if a borrower for some reason needs to qualify for more home or a larger home, or maybe doesn't qualify full doc for conventional or FHA for whatever reason, many other lenders or banks will not have any other options. Fortunately, at the Mortgage Calculator, this is where we love to come in handy. We have over 4,500 loan programs under non-QM, which is under expanded guidelines here. So we have alternative options, especially alternative income documentation, which is typically why we'll use this in order to qualify our borrowers where they wouldn't qualify or they need to qualify for more. So we'll keep everything else the same here, but you'll notice one new option popped up for income verification. So with these non-QM programs, we can obviously do full doc, which is the same as conventional and FHA, 2-year tax return, full documentation, but we have thousands of options under 1-year alt doc, 2-year alt doc, asset related. We did a show on that last week. Business bank statements, 12 and 24 months, very popular. Investor DSCR, our most popular program by far, but that's for investment properties only. Now, our most popular program for a primary home, for someone who needs to qualify for more home, is our personal bank statement 12-month program. And that is for our self-employed borrowers because they're typically going to file 2 years of taxes and have some write-offs and occasionally have trouble qualifying using those full 2 years of taxes. So we're going to, instead of using tax returns, we're going to use 12 months of bank statements, analyze those, and determine an actual debt to income ratio for that borrower using bank statements instead of 2 years of tax returns to actually get a debt to income ratio based on their actual cash situation every month. Typically allows us to qualify borrowers for more money or qualify borrowers who would not otherwise qualify. So these options are amazing. Let's check out our non-QM bank statement options this morning. So it looks like the best combo the computer found here, 7.625 rate, 1 discount point in cost, and that's an APR of 7.672 approximately. Remember, our APRs on the conventional primaries were just over 7, and our APRs on the FHA is in the mid 6s, right? So you see here the non-QM does cost a little bit more because these are alternative programs. These are basically custom programs that are set up just for this. And as you can see, we have hundreds of them. So all kinds of different options under bank statement qualifications that vary in rate all the way up to Something in the very high rates, you'll notice, but this would be for a customer who maybe have a foreclosure or a bankruptcy, other credit-related events. So under non-QM, we obviously can use bank statements, which there's dozens and dozens of options, but there's also options within there to do different things, such as credit events and such. So please get with our team. There's so many options out there and so many programs. We will find the program that fits exactly for you or for your borrower. So those are amazing non-QM primary home examples. Now, before we go into Jose's deep dive into foreign nationals, we always want to do our final two scenarios for investment properties. So we love to work with investors at the Mortgage Calculator, whether it's your first rental property or you have 100 rental properties and you're a serious full-time investor, we have options for everybody. So really quickly, we'll do our last two scenarios. For investment properties, we'll keep the same LTV, 80% loan to value, 20% down payment, but in this case, it'll be for investment properties. And we only have two categories of loan types to compare, our conforming conventional and our non-QM. Remember, FHA, VA, USDA, those are not eligible for investment properties. So we're going to compare our conforming conventional options to our non-QM. So we'll keep everything else the same as our scenarios before. And let's check out our investment property conventional rates. Ooh, some of those shot up here, Jose. Look at that. Investment properties. So remember, guys, the government-sponsored entities that insure these, Freddie Mae, Fannie Mac, remember they're buying these loans. They have added what we call a loan level price adjustment, aka a penalty for investment properties. So you see the computer was not able to find a rate with one discount point. So I definitely would not quote these to my clients. So I would probably come here to a more reasonable quote, 7.5 rate for 3.125 in discount points. Unfortunately, conventional programs do not allow us to raise the rate higher typically in order to reduce those discount points. So because of those loan level price adjustments, we often do not see a one discount point or a par rate for these investment properties. So even if we go up in rate, which many of our investors ask us to do, you see 7.625 rate, 3.125 discount points. So, we're trying. But unfortunately, these conventional programs typically do not go higher. We're at the top of the rates here. So investors always ask for other options. And that's where we love to come in as the Mortgage Calculator and present tons of other options for this same exact scenario under our non-QM programs. So we'll pull this up to 80 LTV again. This time we will pick expanded guidelines, aka non-QM, investment property, and now we have two new boxes to check. So remember, we always have income verification options for non-QM. So for this case, we're always going to choose our investor DSCR. That is our most popular program for investment properties by far. And that's because it actually doesn't require income verification. We're simply going to use the estimated rental income from the property in order to determine if that rental income can cover the housing expense, right? The PITIA of the actual mortgage for that property. So we're not looking at the investor's employment or the investor's income. We're simply looking at that rental income from that property. Now, typically, if the rental income can cover the expenses, that's a DSCR ratio of 1, and it cash flows greater than the expenses. Those are programs that are typically the ones we're looking for, greater than 1, but we even have options for properties that don't quite cash flow and may have a ratio less than 1. So please get with our team. There's tons of options under this DSCR umbrella. We can also use short-term rental income, some other variations. But let's check out our basic options now. And please get with our team if you want a detailed quote there for a specific property. Now, for investment properties under non-QM, we're always going to have a prepayment penalty standard. So we're always going to start with a 3-year. That's a standard. We can do 0, but that does limit our loan options. So we're not going to do that on the live scenario today. But if that's important to you, please let us know. We can quote that. And same here with 5 years. We can save some money going with a 5-year, but not all programs have 5-year options. So that does reduce the amount of programs. So for our scenario, for the most common programs, we're going to use a 3-year prepayment penalty. So we get the most options available. Now let's check out our DSCR. No employment, no income verification options for our investors. And you'll see here now we have higher rates, which our investors requested, with lower discount points, which our investors requested. So the first option here, you'll see the 8.75 rate, obviously a higher rate. This is non-QM, right? And this is no employment, no income verification. But now we have our discount points under 1, which was our target, right? Now our investors can save cash out of pocket on the closing because it's 0.85 in discount points rather than the 3-4 points you saw on conventional. So many times our investors, even though the rates are higher, are choosing these DSCR programs over conventional, not only for the ease of the program, but because to save money out of pocket for the most part. So if you do qualify for conventional, great. We would love to quote that for you. And if you do want to pay those extra points, no problem. But if you want to reduce those points, we have dozens, even hundreds of options here under the DSCR umbrella. You'll see they vary in DSCR ratio. They vary on prepayment penalty. Lots of different variations. Please get with our team. They can find the one that fits best for you. Some of these allow short-term rental income, etc. See if we find a different option. It looks like that was the best combo at the top. The computer did find it. 8.75 rate, 0.85 in discount points. And remember, you can always compare the APR across programs to compare apples to apples. So that is our run through on those programs. Let me go ahead and switch my screen up, and we'll pass it over to Jose to close it out. Give me 1 second. And let me introduce the topic today. So, if you were here earlier, you noticed that we're going to go into a deep dive on foreign national home loans. So this is for a borrower who does not live in the United States and does not get income from the United States. They are a foreign national. They live in a foreign country and they make their income in a foreign country. So that's what a foreign national is for us. I'm going to let Jose explain a little bit more details of the ins and outs of the foreign national programs, but we want to make sure that everybody understands we're not talking about any U.S. citizens or anybody that lives in the U.S. We're simply going to be talking about true foreign nationals here. So let me go ahead and switch up the screen, and we can let Jose introduce the topic, and then we'll go into his live quotes. Put you up top. All right. So you got some quotes ready for us, Jose?
Yes, sir. All right. Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Jose Gonzalez here, sales manager, licensed in September 1995, both as an MLO and as a realtor. What we have today, a very interesting topic and very important to us here at the Mortgage Calculator, since we've been dealing with foreign nationals for quite a while, especially we are a corporate headquarters located in South Florida, the foreign national mecca. So let me first go into a little bit more detail on what a foreign national is not. I mean, Nick mentioned, they're citizens of another country. What they are not is in any way tied to the U.S. with any type of citizenship, permanent residency, non-permanent residency that they may have. If they're tied into the U.S. in any way that they could be considered a resident, then they can only apply for national type financing, no foreign national type financing. And there's a very important distinction there, because as a national borrower, they're always going to be required to have some type of credit history, credit score, according to the guidelines of the program that we've selected. But as a foreign national, they are not required to have U.S.-based credit. However, if they do have U.S.-based credit, then they are subject to the credit guidelines of the program. So no credit means you don't have to worry about the credit guidelines. Credit means then that U.S.-based credit that they have to fit in the box, minimum FICO score, trade line requirements, etc. for their credit. That's a very important point to consider, because as some of you on our team may be looking for options and you go through the pricing engines, you may note that if you don't put a credit score in the pricing engine, you will not get any results. But that does not mean necessarily that credit score or credit trade lines are required. That's just a pricing engine situation, just so you can get hits on the credit. So first and foremost, wanted to do that little bit of housekeeping for the team. And then also a little bit more detail on what a foreign national is not. They are not an ITIN borrower. An ITIN, ITIN, is a international tax ID number, right? So international tax ID number means that they are allowed to work here. Well, not allowed to work here, but they have a way to file tax returns here for work that they've done. And then if we can verify their income through one way or another for what particular program they may qualify for, then you would have an ITIN loan. But here again, now we're dealing with foreign national purchases and refis. So one other thing to note is that not all of the options have the same document requirements. We could have a situation where the foreign national is applying via the preferred method, which is using a DSCR loan, where no personal income of the borrower is required, or if they state that at any given point during the year they're going to want to occupy the property without any issues, then you would want to find a full doc for a national option for them, not a DSCR for a national option, because remember, the DSCR loans are for investment purposes only, and at no time should the borrower nor any borrower's family members and friends occupy the property. It's an investment property for investment loans. That's how they can calculate the debt service coverage ratio. So we do have full doc options and DSCR options, but full doc is usually only a letter from an accountant in their country of origin, or if they're an employee, a letter from the employer. So let me show you the first option we have here, which is a 75% LTV. And my option grabbed the wrong. Excuse me a second. Let's go to the next option here. I don't know what happened there with my rates. Okay, so we have a full doc for national option here at a 75% loan to value. Note that the lowest cost rate is 10.375, with the lowest rate possible at 8.75% at just a tad under 3%. I'll show you the DSCR rates in a minute. Apparently we had a little issue, but note that 8.25 was the lowest rate option. I have those in the refi rates that I'll be able to show you at a 70% LTV. So here's our, all right. We have another option for Florida only, Florida and New York City based properties. This is an ARM. So you'll note here the full doc rate, best case scenario, 10.375. That's a national product. But if we're looking at Florida and New York City only, and in New York City, they only want really stuff over $1 million. But if that is the scenario, this is an amazing option, because look at that rate. Now, if you remember the rates Nick was showing you for the conventional, he's showing you 7.375%, right? So here in this scenario here, we have 7.25 at a 75% LTV. Full doc is considered an accountant letter, again, from their country of origin. You may need 1 to 2 credit verification letters and passport, visa, and their asset verification like any other normal purchase loan. But you're looking at 7.25% rate with only 3/4 of a point in discount to get that rate. So this is an amazing option. This particular conduit loves foreign nationals, and they love the foreign national mecca of Florida, which is why this is their main lending area on foreign nationals. So apparently we had the same little technical issues here, but you can see that the lowest rate possible on the 70% LTV for national cash out. 70% is the highest LTV that we can go to on a foreign national cash out. And this is the lowest rate option, which was 8.5%. And the lowest cost option was 9.25%. And if I show you the purchase, you can see the bottom rate here, 8.25%. is the lowest possible rate option on a 75% DSCR with 9% was the lowest cost option at 3/4 of a point. So you go from 3/4 of a point at 9% to 8 1/4 at 2.875 for 3 points, I think roughly is what we're talking about there. So very good options. You got 4 national cash out DSCR. You can do the full doc cash out at a 70% as well. But you're going to have a better rate from our DSCR option. So the only reason you would really go full doc versus DSCR is simply if your customer says, hey, half of the year I might be there at that property. The other half of the year I'm going to rent it out short term or something like that. Then you could do the full doc option. You would not want to do the DSCR option if they tell you that they're going to be at the property like that. So very good options for 4 nationals here, all the way up to 75% LTV purchase. So keep in mind when you are looking for the options, credit score isn't a requirement. It's just a requirement for pricing. So looking forward to helping you all structure your 4 national loans here at the Mortgage Calculator.
Thank you, sir. Looks like we got a question here from Christina asking, so the 2 pieces of credit requirement must be International Credit Bureau. So I think she was speaking what you're saying.
No, it really depends on the specific program. Now, in the option that I presented here, that is the full doc option, which does require credit reference letters. It's just one credit reference letter for the full doc option, and that's 30-year fully amortizing loan. And for the one that's a 7/1 ARM, I'd have to check their guidelines, but it's either 1 or 2 option, and it's just credit reference letters. So you would ask the borrower who they have for credit, and then they would reach out to their creditor and ask them to complete the letter, send it back to them, preferably in English. If not, the letter is going to have to be translated by a certified translator into English from its native language, and then we would include that with our credit package. So it's not like an international credit report for this particular option, but in some cases it may be. That's why you have to be very careful what option you're picking, because most of the time they really are not going to have a better rate. You just may pick it because, and then you realize when you're in it that you have to get all these additional letters that may not be necessary. So be very careful when structuring the loan.
And the DSCR ones, typically you're not going to need credit at all, right?
Correct.
The goal is to not have credit with the DSCR, right?
Absolutely. I mean, it's an amazing option. We should use it while we can, but it is a DSCR loan for 4 nationals that does not require personal income, does not require an accountant letter to prove where they live, and does not require any credit reference letter, because there are other DSCR options out there for 4 nationals that do require an accountant letter and do require a credit reference letter. So for the option that I showed here that was full doc, fully amortizing, that requires, they have a DSCR program as well, but theirs requires the same accountant letter without income and credit reference letters. So yeah, team, I say to the team, if they have any specific questions out there, just reach out to me if they're unclear regarding that matter.
All right, thank you. Let's go ahead and wrap it up then. We do this show every weekday at 11 a.m. Eastern, so tune in and you can watch us go over the rates and do a deep dive into a different topic each time, just like we did today with the foreign nationals. We have over 350 loan officers all around the country, licensed in 22 states. So if you need a quote on a specific scenario, we can have our loan officers send you out a quote within just a few minutes. So if you're already working with one of our loan officers, maybe they shared this video with you, that's great. Get with them and they can send you a quote in just a few minutes. If not, you can visit us at themortgagecalculator.com and we can pair you up with one of our loan officer consultants to walk you through the process. So as you could see from all these different programs that we are quoting, not only do our loan officers know how to do conventional FHA, VA, USDA, but we take it a step further, and our loan officers are consultants that can consult you through the process of these thousands of non-QM programs that we also have that most places don't have, including these foreign national programs. So appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. And we will see you tomorrow at 11 a.m. Eastern. Take care, everybody. Have a great day.
Thank you, everybody.
Thanks, everybody.